with a stop about 300, target of 275. Havels is something that's showing strength, so that can be bought with a stop about 587, target of 605. And Sun Pharma, after many days of decline, that can be bought with a stop about 565, target of about 590. For the record, we have just gone short on Bank Nifty.
Okay, that's the GMR management getting set to address the media. We will, of course, just cut across as they begin to address and talk about their Q4 performance. Just want to walk you through what is happening on the futures and options side of the market. While, yes, there is pressure for the frontline indices. Okay, let's cut across to GMR.
We will move to the energy business thereafter, where Mr. Rajkumar, the CEO for the business, would do the same, and then come to the glamorous part of our business, if I may say so, which is the airport sector. And Siddharth, who's the CFO for the airports business, would do the honors. So with that, over to you, Subbarao.
Yeah, thank you. Good morning. One happy tiding that we have to inform you is the receipt of the DIAL tariff order. The pain point, hence, the DIAL's financials would become history progressively, and we will have happy going forward. The financials for the year hence have been impacted very adversely by DIAL's financials. The DIAL has posted more than 1,000 crores loss, which has crept into the financials of the consolidated GMR Infra, which resulted in more than 600 crore loss for the year on consolidated basis. If you exclude DIAL and to Sabiha Gorkin to some extent, then the results for the rest of the businesses are positive. The revenue has posted substantially high growth at more than 30%, both on the net as well as on the gross basis. EBITDA also would have been higher, but for the fact the DIAL tariff order has not been received, and also the energy business subdued performance in the last quarter because of the shortage of the gas. If you exclude these two factors, which are industry phenomena and which is a regulatory phenomena, the rest of the businesses are doing exceedingly well. So I would come back with your questions later. I will pass on to my other colleagues.
The highway business for the GMR this year has been very good, and we have registered a profit PAT of 52 crore against a loss of 38 crore in the previous year. The toll segment particularly has been encouraging despite some of the adverse features of Telangana strike and sand lorries sand ban in the Tamil Nadu state. In the toll segment, we have done a revenue increase of about 11%, while PAT has gone up from minus 36% to 8%, which is a very encouraging sign. And the last year we had, of course, won the Kishangarh-Udaipur Ahmedabad project, which is the largest project in the country in the highway sector. And I am happy to inform that the financial closure for the project, which was due this month, has been achieved, and the agreements have been signed and submitted to NHAI. We expect the project to take off soon as the environment clearance is granted for the project.
Good morning, everybody. As they say, when the going gets tough, the tough get going. So we have positioned ourselves quite well despite challenges that we have faced. We have had a couple of challenges. One was, of course, the steep decline in the availability of gas from KG Basin, which has affected our operations. To some extent, our operations in South Africa coal mine have also impacted us negatively, but we are working out solutions, and since this year our coal-based plant will come into operation, I think things will start looking up very, very positively. So we are looking forward to much brighter future.
Good morning, everybody. As far as the airport sector is concerned, Arun mentioned it's a glamorous sector. I don't know whether it's glamorous, but it definitely is one of the very closely watched sectors. The quarter 4 of financial year 11-12 was a good quarter for the airport vertical. The traffic in all 4 airports was about 15 million passengers, which witnessed a growth of about 9.3% over the same period last year. The gross revenue for the quarter at 1155 crores was 7% higher over the last year's same period. The gross revenues for the full year were over 4,400 crores, higher by 45%. The overall EBITDA for the quarter for the vertical was 217 crores against that of 205 crores same quarter last year. The flat EBITDA was mainly due to the impact of one-time non-recurring expenses of about 40 crores and also not accruing national revenue of about 34 crores. But for these, EBITDA would have been higher at 291 crores, a growth of 42%. The vertical incurred a loss of 438 crores for the quarter against a loss of 174 crores last year for the same quarter. The full year loss was 1022 crores against a loss of 371 crores last year, mainly due to full year pre-tariff losses at Delhi Airport versus part year in the last financial year, and also hit on account of one-time costs of about 222 crores and also not accruing national revenues of about 66 crores. Removal of these exceptional items, the loss would have been lower at 734 crores. In terms of regulatory, the financial year, as Subara also mentioned, was 11-12 was full of challenges. Delhi Airport finally got its long-awaited approvals of project cost, approvals on ADF, and also finally the approval on the tariff, which came in April of 2012. This is effective from 15th of May 2012, and the full year impact will be witnessed in the current year. The regulatory approval on tariff, though below expectation, is a positive step towards clearing the regulatory uncertainty and also stemming the losses of the airport sector.
Right, we are now ready to take your questions.
Start with the CAG report on DIL, where they said that this could potentially cost the government a loss of 1.63 lakh crore. Your comments on that, because this calculation is based on your own projected earning capacity for this project. And the second question is on the overall business environment. Has it worsened in the last 3 months, and how is it going to be going forward?
I think the first part I will take. And the second part naturally will go to Subara. Yeah, we too have read what's come in the papers. If we were to believe what's written there, then it's a draft report. And many times, many things change in the final report. Yes, we were asked some comments on the drafts at the draft stage, which have been offered to the ministry. We respect the institution of the CAG, and we sincerely and do believe that they are doing yeoman service in protecting the interests of the people at large. Having said that, the sensational headlines in some quarters of the media of figures which are astronomical, to say the least, I think are entirely misplaced. They are based on a calculation, you said rightly, on a figure which was given by us. That figure was a figure over 58 years. And anybody would understand that you can't do a calculation for anything based on a cumulative figure of 58 years. Even if I were to accept that logic, then by that admission, we as DIAL would end up giving to the government, to the airport authority, figures in excess of 300,000 crores. So this is entirely based on the revenue share that was done last year. So I don't think that's the right way to project a figure just in order to, dare I say, make it sensational. There were other, since you brought the subject up, there were other points in the report which said that undue favors had been granted post the bidding process. For the record, let me put it straight that nothing, absolutely nothing, has changed which was there prior to the bid, during the bidding process, or after the bid. And this stand, as you know, we got taken to a court by one of the competitors to the bidding process. The highest court of the land, the Supreme Court of India, has upheld the bidding process. So as far as we are concerned, the bid was won fair and square, and no undue favors of any sort have been granted then or even now. There's also a mention made in that same news report. Since we are not privy to the CAG report or the draft report, it would be foolhardy for us to comment any further. But however, there was a statement made there that the development fee was not part of the bidding process, and therefore that's the undue favor granted. This point too has been discussed, debated, and upheld by the Supreme Court of India. So as far as we are concerned, that matter rests, and there is no argument about it. It is in place as per the laws of the land, and the laws of the land which also concurrently run with the operations, maintenance and development agreement with the government and the airport authority. So this is our stand. It's good that you raised this question, because I'm sure it's been on everybody's mind since the day the reports hit. But it's still at the draft stage, and we don't have a copy of the report, so obviously it's not right for us to comment.
Okay, that was the management of GMR. GMR came out with a disappointing set of numbers. In fact, most of the asset owners, including GVK, GMR, and then Lanco, they've come out with disappointing set of numbers. Let's take a break. When we come back, we'll connect with Dr. Rajiv Lal, Chief Executive Officer and Managing Director of IDFC. We'll talk about dynamics of what's happening in the power business, and also what is the IDFC's total disbursement plan for FY13.